Good afternoon. This is Ron Brown. It's July 22nd, 2023. This is a continuation of the webinar series I've been doing called Unleashing the Power of HCS Investor Software. But from now on out, in this video and subsequent videos, I'm going to be primarily talking about techniques to locate low-risk trades and control risk using all of the great tools that are available within HCSI. Each video will concentrate upon a small segment of the program, the tools that I've used and developed with my warehouse views, filters, combos, and so on. I'm not going to make it broad-based each time. It's going to be pretty specific. So let's go ahead and get started, and I'll show you what I have for today. And whenever I'm in town on Saturday, I will build upon this. Since I'll be discussing specific stocks, you have to realize that even if I like a setup and do my analysis on it and say this is one that's going into my watch list, that does not mean that I'm advocating that you take these trades. That's up to you. I'm just showing you the things that I look for. So just remember this: any stocks, index, or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. There is a lot of risk in trading stocks. We all know that. So that's my purpose, to try to help us find low risk entries and to manage that risk. This is a layout I'm going to be using at least for this session and maybe for subsequent sessions. I have the warehouse here, which I can expand and explain. Then I have a daily chart here. I have a weekly chart here. And over here on this side at the last webinar, which I did on Thursday, I introduced this stock analysis sheet, and when a stock catches my eye, I'll go through and I will fill this information in, and I'll show you that maybe on one or two stocks today. If you're a member of the Insider Club, this is linked to the emails I send out, or you can just build your own very easily. Okay, today I'm going to start. I'm not going to do market analysis. I think most market analysis is a total waste of time, because we really, yes, we can put the odds in our favor, but opinions on markets, I think they do maybe even do more harm than good. So you can do your own analysis. You know what I look for, and if not, you can go back through some of those webinars. But that's history. What we're doing with prospecting is we're looking for stocks that meet certain criteria as far as technical criteria. They're in a low risk position, and they have a chance to go up without too much downside risk. If I start doing market analysis, I can get bogged down doing that rather than showing you what I want to show you. Okay, let me close this folder here. So where I'm going to start is in this folder, which is the fourth one down. Now these are all for market analysis, the prior three folders. And this is for market analysis also, but it's also for prospecting. So if I go into the A folder, this is stocks and groups moving up and down. These are the Woodward and Brown smart groups, which have been around for years, and they're end of day. So I'm going to open this up, and you can see that these are stocks that are in the moving up smart groups. This takes into account all of the stocks that are coming up with the filter and combo, and this limits the stocks 1 to 15. Now this was my original smart group, and then it was pointed out to me that a lot of the lower price stocks were not being seen for group movement. I think it was the precious metal stocks were on the move, and they weren't really showing up because these smart groups are generated and it takes the top 100 stocks. So that's why I built another stocks and groups moving up both to the upside and the downside with the complete list of stocks that are in industry groups and then limiting it to the 1 to 15. Now, I'm going to just concentrate on this right now. So this is the entire group, and I'm going to click up here on the pencil, the filter, click on edit, and you can see that it goes directly to the Woodward and Brown Stocks and Groups Moving Up Smart Group. If you aren't familiar with where that is, if you go into the designer, it will be in the green smart groups under Woodward and Brown, and they're down here. These are the stocks that I'm looking at right now, moving to the upside and moving to the upside 1 and 15. And then there are the downside stocks too. They're not showing up because I have a filter on. So this is where I am right now. You can see that it's limited up here in the upper left-hand corner to 100 stocks, and the sort is on the industry percentage price change. So this is what it looked like at the close on Friday. Here's the industry percentage price change 1 day and 5 day, and you can see that life science equipment is at the top of the list. Now if you want to do a secondary sort, you click on the A to Z, and I'm just going to click in this white area and type range in here. I want the stocks that closed at the upper part of their trading range to come to the top of the list. And if you look down here on the range, you can see this is 92.52, this is 89, 89, and so on down the list. So the strongest closers are at the top of the list. Now, Thermo Fisher Scientific, going across here, the earnings are due next week, so you have to be careful with that. BPA volume on this particular bar was high, wide with the spread, and very high on the close. This crossed over 9 days ago, 0 being the crossover day. So it's probably not a low-risk setup. The relative strength rank is poor, but if you look down here on, okay, these are all the life science. There is one of these stocks that has a high relative strength. The rest of them are low. These stocks have outperformed the S&P by 6%. This stock by 6% on both 5 and 10 days. The last close is 562.19. So I know it's a very expensive stock. I'm not going to be buying that stock. I'm sure the options are illiquid, if there are options. So I'm not even going to waste my time looking at that. There was an effort to rise. I'm not going to look at it to really go into an analysis, but I suppose I should bring it up and confirm all of this. So all of that information that I just talked about here, the volume was high, the spread was wide, the close was very high. And let's make this full screen. Effort to rise, which is a bullish sign, and you can see that over here. Now, I will take a few minutes here to talk about context. What is the context of this stock? Where is it in relationship to its moving averages? And I use the 3 versus the 6. These are all exponential moving averages. 6 and the 18, and the 18 versus the 50. Now, this is a chart that I put in 2C, and the reason I put it in, as I explained in the webinar, is I wanted to be able to see the 3 crossing over the 6 better, so I just moved this window up above the volume. See, I can't see where this crossed over when it's scrunched like that, but when I pull it up here, I can see that the 3 crossed the 6 on that day there. So getting back to the context, I'm going to bring up an arrow here. I want to point some things out. The context is the fan is in a downtrend. Why is the fan in a downtrend? Because these are all stacked negatively. It's about to go neutral. This is the 18 here. When it goes up through the 50, then this will disappear and both of these will be red. So there is some momentum to the upside. When it goes through the 50, and then here's the 100, and then here's the 200 that it has to get through. So the trend has been down for quite some time. It has been basing, getting back to where it is with context. We know where it is relative to the moving averages. But look at all of these VPA flags, and these go into my context analysis. Here's no supply. This is strength coming in. This is a confirmation of strength. And that happened on the day that the 3 crossed the 6. Now, here's a low volume test. Here's a confirmation of that test. It went sideways. But notice that I didn't really put that in the best spot. It could have been a little bit lower. But it was being accumulated through here. So your risk on a stock like this, a trade like this, is actually pretty low when you start seeing a bunch of VPA, bullish VPA flags and white candles. And then it took off right here. This is where the crossover was. Then a gap up, and then it pulled back. But on each of these days, notice on each of these 3 days, even though these are red candles, the stock closed in the upper part of its range. See the lower wicks on all of these? Upper part of its range, and then it took off. At the same time, you can see these volume pocket pivots, the blue bars. They were occurring because volume was higher on these days, on the up days, than any volume on the down days. Also, the 6 crossed the 18 here. You can see it's kind of hard to see there, but it did. And the pressure is coming off of the 18 versus the 50 because this histogram, the bars are getting shorter and shorter. And the volume point of control, it turned green clear back here. So these are the things I look for when I'm looking at the context. I'm going to get rid of those. Take control with the mouse again, and let's look at the weekly chart. Now the weekly chart is a big mess. You can see how volatile this has been. It's been stuck in this range for a long time. But going over here, you can see a low volume test and then no supply. And this is the prior week and this is last week. And there's an effort to rise. Just as with the daily chart, I don't consider this stock to be in an uptrend yet. It's still in this trading range. I'm going to put the arrow on. Let's go to yellow. I think it might show up a little bit better. So what I look for after this downturn is 3 higher highs. So this would be a higher high, and the second higher high just occurred this week as it passed through, because none of these down here surpassed this high right here. So for this to be in what's called a price trend uptrend, it's going to have to take this high out here and form another high, and then it could be considered to be in an uptrend. Now you can see there was a strong uptrend with multiple higher highs over here, and then these are all downtrends here. Let's see, on this one, that was the first higher high, second, and then it did get to a third higher high, but it failed. That's why we control risk, because no matter what criteria we use, there's always a chance of a failure. But over here, it's moving up, yes. You saw what it looks like in the daily chart, and I'll go back to that. If we use the 3 higher high criteria, it would be in an uptrend on the daily chart, but not on the weekly chart. You like to have them both synchronized. Okay, I've spent a lot of time in this chart, but I'm just kind of laying the groundwork for what I look for. Now, let's go back in here, and I'm going to look for down these columns here. These are all things that I've come up with to help me and you look for low-risk trades. Now, let's go here to CCL, Carnival Corporation, or Norwegian Cruise Lines. I'll just go to Carnival. You can see that the 3 went below the 6 8 days ago, and as of Friday, the VPOC turned positive, or the volume point of control. It's got a 97 relative strength and a 99 Kirkpatrick relative strength that outperformed the S&P by 3% on Friday. Or I'm sorry, that's 5 days last week, but underperformed it by 9% over 10 days. It's only a $17.88 stock. It was up for the day and up since the beginning of the week, closed at 93.94% of its daily range on lower volume. Trades a lot of volume, 42 million shares. It's a lot of volume. Okay, group was up. There's tests for supply. Let's take a look at this. Bring this up. Going to minimize that so we can see the weekly chart too. So this looks like a low risk, potential low risk trade, I should say. You can see the 3 is still below the 6, but the pressure has come off as the moving averages have settled down. What is the context here? I'll bring this arrow up. The EMA fan trend is up. Here's the 200, the 100, the 50, and the 18. It's resting on the 18. The 3 has not crossed above the 6. We've had these down days here. It tried to move up, but if you look down here, you can see that the 3 was below the 6. Even at this point, I don't believe, I'll have to take a look at this. I need to gain control here. No, it did not cross. This is the reason I put this window up here, so I could see it better. So it didn't cross, then it pulled back, but now we have a test, and this could be, let's make this full size. Get in here. This low is 1757. What's the low on this day? 1761. So this low is lower than this one. So this could be, I'm going to consider this a pivot since this low is lower than the prior day. And if this stock takes out this high, or better yet, this high right here, this would be a confirmed pivot. And at the same time, if it's doing that, the 3 would be crossing above the 6. I pointed out that the volume point of control was already positive. So this is a stock that I'm going to consider for a trade next week. I'm going to add it to a group. I'm going to choose. Going to go into user groups, watch list. I'm going to say new, and it's going to, this is 2023-07, and this data is from the 21st. I like to use the date from the last day of the data. Let's bring this back up again. We need to look at something else here. Looks like the earnings are out of the way already. 9/29 is the next earnings due date. So if that's the case, it's even a better setup. Now, I'm not recommending this stock. I'm just saying that I'm going to be looking at it. Let's do some more analysis here. Look at the trend on the weekly chart. You can see there's more than 3 higher highs here. This is the first lower low right here because it took out the low of the prior week, and it's holding here. Now, this is no demand, a sign of weakness, and that's appearing because look at the low volume here. So it's going to need some volume to break past that candle that I pointed out, and you can see that this is the relative strength compared to the S&P. It's up slightly. So the stock is setting up nicely. Okay, let's take a look here. The June quarter earnings are in here. They were negative, but look over here at this area. You can see the revenue is growing, the earnings are growing, and the current first quarter estimate is supposed to be up 231.3%. So this stock has been rising on earnings and revenue growth, even though they're negative after the corona period. So I'm looking at it from a technical point of view. So let's fill this out. The stock is Carnival. The symbol is CCL. The date, I'm doing this on, do it this way, 07. Use yesterday's date. That's what the date is from. EMA fan, is it up, down, or neutral? The fan is up, so I highlight that and I do a Control B. The 3 and the 6s are down yet. The relative strength rank, they're both here, 97 and 99. I use both HCSIs and Kirkpatrick relative strength. VPA flag is low volume test. VPOC is yes, so Control B. Volume pocket pivot, no. No volume pocket pivot down here, that's Control B. Contextual risk, I'm saying it is low. Why? Because it's been basing through here, and I'm looking at this as a support area right in through here, and in the moving averages, the 3 and the 6 are close together, so my contextual risk is low. Intrinsic risk. Intrinsic risk is where you look at a stock and you say to yourself, what are my chances that I'm going to get stopped out on this? Are my chances looking better that it could go higher or lower? And this one has got support through here. My chances of getting stopped out, if I would put my stop clear down here, would be less than putting them just below this one here. I would have to decide if I want to, how much money I want to risk or position size for that risk. So as far as the intrinsic risk, I'm going to, I don't have quite as much support in through here as I would like. The weekly chart does have support below that. I'm going to say the intrinsic risk, I'm going to classify this as neutral. You have high, low, and neutral. Now, low pivots. This is unconfirmed. I'm considering the low of that my pivot. High pivots would be for shorts. If I'm looking for shorts, the price action trend using the weekly chart is clearly up because there haven't been 3 lower lows. So I'm basing this off of the weekly chart, analyze the weekly, trade the daily, look for setups on the daily. Up, daily trend is neutral because it's been basing sideways. And the weekly trend, of course, is up. So that's bold. I use the price action trend. That's always based upon weekly, and then I also make a determination on the weekly trend, and it's clearly up. So this is my current worksheet. Based upon this, there's a lot more positives here. I like the pullback. I like the tightness in here. So I'm going to go ahead and say that, well, I already did. I put it in a watch list. But this is one that I'm going to set up for a potential trade. Now, the next thing I do is if you go down here to position sizing, this is the information for my spreadsheet. I'm going to bring this up, and you can see that it gets rid of the moving averages, and it's not so condensed. So I will bring this tool up, and I'll use red. Actually, I'm going to use blue. So you can see this pivot is lower than this. Now there's several ways you can do this depending on how much risk you want to take. Let's say I use that low, and I'm just going to require it to go past or break a few cents above this level right here. And that's at 18.15. I would be risking 3.54%. If I require that it takes out this one, I'm risking 5.36%. If I require that it takes that one out, 5.75. And if I really want to be conservative as far as not getting stopped out, and I wouldn't do this. I would be using below this low, because if it moves, let's say I'm going to use this right here. I'll put it above this upper wick here because that's where it failed. So in that instance, I'd be risking 5.75%. Now, just remember, all trades are random. Whenever you put a trade on, you have no idea what direction it's going to go. But if this has the force to get up through this area, especially on volume, and look how the volume is falling off, that's a pretty good indication it's going to go higher. So the next thing I would do would be to bring up my spreadsheet, my risk analysis spreadsheet. Okay, I've got it open. And this is, I position size the stock here. I want to leave that in there, so I'm going to highlight this, do a Control C, and then a Control V. And I'm going to put this information in my spreadsheet. Now, I'm going to overwrite this symbol and put in CCL. And I'm going to take this information. I'm going to use 1856 as the high. And the low, I'm going to use this low right here, 1755. And a stop would be 1751, 4 cents below. A buy would be 2 cents above 1858. If I risk 50, or if I have capital of $50,000 and I only want to risk $250 on the trade, this tells me that I can buy 233 shares. So currently it says 100. So I'm going to change this to 233. Now you can see, remember my number is 250, that I would be risking 249.31 on a 1 risk or 1R. Now, if it were to move in my direction, for me to make 1R, or the amount I'm risking, it's going to have to get up to $19.65, which would be right up in here somewhere. You can see the first line up there. That's the area it would have to get for me to make $249 or $250. If it gets up to 2R, which would be 2072, that would be $500, or a 2-to-1 risk-reward ratio. So here's the amount that it would cost me. Not what I'm risking. I'm risking $250. But this is what it costs. Cost on margin would be $21.64.57. And I don't really fill, this is old information here. I really don't fill it out. I just use this spreadsheet for position sizing. So what I would do, and what I will do on this, is if I decide to go with these parameters, I can put a buy stop order in Thinkorswim, and it'll get filled automatically. I don't think it's going to gap above this at the open, so it would take some movement. Now, if I decided that that is too far to get to make my 1R, and I want to move this down here, let's just say I really do a tight requirement here, and I'm only going to risk 3.61%, and it would take this out. I'm going to change this high to 1815. And now I could buy 233 shares and only risk 3.53%. This says 3.61. It's close. It's kind of hard to get it perfect here, but if I use these numbers, 18, 15, and 17. Oh, okay, yeah, 18. I put it in the wrong place. Sorry about that. So let's go back. 18, 15. Now that makes more sense. 363, right, 361, close enough. Well, this is going to be a little different because the 4 cents for the stop and the 2 cent buy, so I'm actually risking 363 rather than 361 over here. And now you can see what happened with this chart. Here would be the buy point. To get to 1R, I would only have to get up to approximately 1882, and to get 2R, 1948. Now this says 1R is 1883, 1 penny off, and 1949, 1 penny off. So it's close enough, but this tool is very handy to figure your risk and look at different scenarios before you consider taking a trade. Now, I can go through a lot of stocks and look at the ones, or put the ones I really want to look at in a list, and then I would go through this process before I risk any money, because I don't want to risk more than the correct amount. And I see I didn't move this up. I can buy 378 shares now. See, I left it at 233, and I'm only buying only risking 153.78. Let's move this up to 378. And now you can see it goes to near the 250. This is the amount I want to risk. I overlooked that. So I have to put the correct number of shares in. Now, if you don't want to go all in because this is a tight fit, you can buy any number of shares you want to, and it's going to tell you exactly how much you're risking at 3.63%. So let's say I want to buy 200, about half a position. I'm only risking 132, and what I'll do a lot of times is I'll buy half a position, and then I put a buy stop above the original purchase price. So that's going to end this session. I've gone 35 minutes, which is plenty long. But this is a process I go through looking for low risk trades, and I'll be doing more of this every week. I'm not recommending this stock. I'm just saying it's a good candidate, and I'm showing you different scenarios where you can buy it and how much you're risking. You should always know that before you get into a trade. Thank you for listening, and have a good week. I don't know if I'll be here next weekend or not, but I'll be doing a webinar on Thursday, and I may not be here next weekend to do another video, but I'll continue to do these rather than doing market analysis.